All right, so this is obviously the day after because I did not have time to do this yesterday, but this is 12/19/24, my chart review, and I'm actually pretty excited to go through this one because I feel like there's quite a few little tidbits in here that are super important and that I definitely learned a lot from. So I should go ahead and get into it. So to start off the day, I did take this double trap here. Thomas also took this one and he marked it. It's a pretty good one. You can see there's a first entry, second entry, but you don't want to take that because the short-term uptrend is blocking the trade here and you don't want to do that. But then whenever the double trap comes, it's broken outside of the short-term uptrend and it's also a triple test. So that's a pretty good bet to take. And like I said, Thomas did also mark that. So nothing much more to say there. You can see that here he had everything basically the exact same. So that's good. Next, I tried to get in on this lower high. So you can see there's a first entry, second entry, failure, and then a lower high breakout pullback of this congestive area. I tried to drop my limit order back because the signal bar is so big. And you know what, this is a little bit more advanced of a trade, especially for myself. It's not something that I would typically take, but Thomas also mentioned it, and he said that the bar is 6 points, so it's a little bit more aggressive. And thus, like I said, I tried to drop my limit order back, but prices never came back. So if you were going to take that, it's more advanced because it's more risk. The other thing I wanted to point out here, which I did not see on my chart, and I do want to talk about this a little bit more later, is that I went ahead and deleted the overnight lows here because prices had just pushed through them without really coming back or without really finding any support off of that. But you can see Thomas kept the overnight lows right here, and he was using that as a way to say, okay, well, prices came back and tested that. That's another good reason to go short, adding that on top of looking for the break a new low for this downtrend. So just wanted to point that out. I then took this second entry short, which was a good second entry short. There's one thing that whenever I was looking at this, I was a little bit uncertain about, and it's that the short-term uptrend right here. So if you draw a short-term uptrend from the lows right here and it has a close outside and new high, well, the second leg is so much bigger than the first one. And sometimes I would look at that and be like, okay, well, maybe that's wrong. Maybe this isn't actually two legs up, and maybe I should just be drawing this wider to compensate for that. But since I've been studying Thomas, I've kind of moved away from doing that and being okay with seeing a second leg that is bigger. So instead of seeing it like I was just talking about, I was instead looking at this and saying, okay, well, this might be exhaustion to the upside. That's a really big bullish bar right there. So that might be exhaustion to the upside. And then whenever I saw that bearish bar, I knew that I had to take it. Thomas also marked that, so that was a solid trade. Now on to the next. Okay, so this one right here, I saw the two broader legs up and I was eyeing this larger downtrend at the time because I thought it might be correct. You have 1, 2, 3, basically 4 touches at that point, and then a couple touches on the channel line as well. So the downtrend was a little bit off. Thomas said he didn't want to start it up here because this is still a part of the sideways congestive area. So instead he wanted to start it here where the downtrend actually started. And I wouldn't say that actually, really fits that much better because at least mine has the 2 touches on the channel line and it does have more touches. But that's just something that's worth noting that I'll have to work on. The other thing here is, okay, so I decided not to take this lower high, and you can't actually see what the signal bar looks like here because the picture I took is it not completed, but it ends up being a doji bar. And so I ended up skipping that. And I remember thinking, okay, if that's a bearish bar, I'm going to take that. But then we get this right here, this doji bar with no body. And I decided not to take that. First off, because I was a little bit uncertain of this larger downtrend. The overall day, and if we saw the left side, the overall day is overall kind of a big up, big down day. And so I was thinking it's more of a range, and I was hesitant to draw a wider downtrend. But the main reason why you want to consider drawing a wider downtrend here is because there's already these 2 very clear legs up. And if you're going to get a reversal here, you're probably going to see one very, very strong leg up, something like you see right here whenever prices had that overshoot. Of course, that wasn't a reversal, but this is more of something that you would see if there was going to be a reversal. I did see these 2 legs, and that was a big reason why I wanted to draw the downtrend, but I didn't have the conviction or faith that that was going to help prove that downtrend there. So my sort of takeaway for this one, and I'll repeat this again later, but the takeaway is basically Thomas talks about, okay, why can we take this doji bar here? Well, he says that the tail is so much more significant. Look how big that tail is compared to the body. And and I think the context is just so good other than that. I mean, it's that like kind of double top, lower high after two larger legs up off of a proven trend line. So you can't just take that bar and say, okay, well, we're going to throw the whole thing out the window. You have to look at that tail. All right. Now at this point is where I kind of messed up the most as far as this day goes. I ended up ditching the larger trend after we pushed through it. So at first, like I said, I was looking at this as two legs up and I was like, okay, great, that makes sense. But then prices come down here, the short-term downtrend does not play out, and then you end up moving up. So once we got that kind of push up there and we pushed through the trend, I was like, okay, well, I'm going to go ahead and ditch that downtrend because I was already sort of uncertain about it anyway. And this was a mistake. And I remember whenever I was looking at this, I was looking at this uptrend and it felt a little bit too wide and it felt off, especially considering that on the left side, you have this down action. So I felt weird kind of drawing that, but just kind of given how it looked, I thought it made the most sense and I was incorrect there. And you can see how Thomas kept this downtrend here. And even though there was this leg here, this little small leg does not negate the whole entire other downtrend there, and that's something that I'm going to have to work on as well. You can see that almost actually messed me up because I thought that this downtrend had already played out and we were reversing to the upside. But again, think about what I was saying earlier in that if we were reversing to the upside, we would see probably one very strong leg similar to this, not these two weak legs and pushing back below the EMA repeatedly. So this is not a sign that we're really reversing to the upside. So I definitely should not have been looking to take a long here. So there's a couple, different clues, of course, but I was looking to take a long because the short-term downtrend had played out. It's a good signal bar. It's not the best signal bar because it does have an equal low, but it's a good signal bar above the EMA, and I was thinking we're headed for this break new high. Other thing here, prices did not touch the channel line, showing you this channel could be incorrect. And again, we're overall bearish at this point, so you don't really want to draw a wider uptrend like that. I ended up getting lucky that this did not break higher, but if it did, I most likely would have entered that. So got lucky there. All right, so next thing, even once prices pushed back below the EMA, I didn't bring the larger downtrend back into play. Instead, I started looking at this as a range because you can see pretty clearly at this point, prices are flip-flopping the EMA, and I went ahead and started predicting that there's a range. That is not necessarily the wrong thing to do. But I should have still had that downtrend in play, especially now that we've pushed so strongly below the EMA and we did not retest this uptrend. So especially once we did not retest that uptrend and we're pushing back below the EMA, like I just said, that I should have brought that downtrend back and I should have went ahead and ditched this wider uptrend right here. So that was like the last kind of nail in the coffin that I definitely should have known. So that was a mistake. Again, it's not necessarily wrong that I had the range because Thomas does talk about when weak channels break, you'll often see this kind of sideways action, and you can go ahead and predict a range and where there's going to be bearish depletion. So he went ahead and drew this support here, and I thought this is interesting. I had my resistance a little bit lower. I thought that this kind of made sense for the resistance, but he kept his higher. So I'm not exactly sure why, but that's just something to note there. And here's another, I'll go ahead and look at how I was seeing it first. And then, so at this point, I was seeing this as the range low. I saw that all the downtrends had played out. So, all that is correct, except for the fact that, of course, I was still missing that larger downtrend. But at this point, it's not so important. We now have this kind of major double bottom, bunch of tests on the low side, and then we have a failed second entry short. So there were a couple of reasons why I wasn't interested in this. First off, the short-term uptrend already had a break and new high. So usually I thought that was a sign that you wouldn't want to really look for a failure, which we'll look at some examples later on to see that that is not necessarily the case. And the second reason is it's not off the EMA. So I was only taking trades off of key entry points, and it's not off the EMA. It's pretty close to the EMA. So I guess Thomas figured that it was close enough to the EMA. So that's something to maybe think about there. Not something that I really want to push too much, but of course is worth considering. Yeah, so there's that. Oh, the other piece here is that, so instead of just having the short-term uptrend with a break and new high, why are we looking at this wider uptrend? Well, since the downtrends have played out, we're expecting reversal. So that's basically what I was getting at earlier, was whenever I was looking at this, I was looking at it as a short-term uptrend with a break and new high, partially because I'm looking at this as a range, and I'm thinking, okay, I want to keep my channels really tight, but Tom is looking at this as the downtrend just played out. We're expecting possibly to get some kind of reversal here. So, from a context perspective, you want to go ahead and widen that trend, and it makes it so the failure is also off of a trend line, which kind of helps you out there. And here, so at this point, after this very strong push up, I was like, okay, well, that's obviously a reversal, and my resistance from my previous range that I had is not holding. Okay, so I went ahead and I was like, okay, well, this downtrend was probably right then. I'm going to pull this downtrend back. It's got to break a new low. Now we're getting a reversal. But I went ahead and got rid of the range, which was not the right move. It goes back to what I was saying earlier, where whenever a wide and weak trend breaks, you can go ahead and predict a range. And here I should have kept the support and went ahead and started looking for the resistance right here. And you can see that's exactly where prices were finding some resistance, is right off the old overnight lows right here that ends up being the range highs. So I got rid of the range. I did get the, brought the trend back, which is great, but shouldn't have gotten rid of the range there. Now, I wanted to look at a few similar trades. The failed second entry is the first one that I wanted to look at. So what was I looking for in particular? I was looking for a failed second entry after a wide trend plays out, and a failed second entry where the short-term trend in the direction of the trade, so the short-term trend up here in this case, had already played out, because that was kind of the two, I guess, like key things I wanted to see in this case. So here's one. It's not necessarily a wider trend playing out, but it is in this kind of range action. The uptrend had played out. All the uptrends have played out at this point. You get a failed second entry long. And this one, so this is not an exact, I guess, like repeat of the other one. But whenever I saw this, I just wanted to point out the difference between this one. You can see this one comes right off of the trend line, has room to the channel line, whereas this one's going right into the channel line. So you don't end up wanting to take this failed second entry, even though it, technically looks pretty strong here. First off, it's far from the EMA. Second off, it's right into the channel line. So just want to point that out whenever I saw it. Second here. So this one, again, not necessarily a wide trend playing out, but this uptrend has played out. You get this downtrend that is a little bit wider. So the reason I wanted to look at this is because you could easily draw a short-term downtrend here, like this gray one, and say, well, there's already a close outside a new low there, so I don't want to take this failure because this is the first leg up. But you wouldn't want to do that because since this uptrend has already played out, you are more willing to draw the downtrend wider, and you're expecting a reversal to the downside, especially in this case because you just had this strong move down, you had an upward correction, and now you're pushing back below the EMA. So it's pretty similar to the other case. Well, a little bit, not really, but anyway, the point here is that you want to draw the wider trend because the other trend has, so the uptrend is played out, so you want to draw the wider downtrend, and that makes it more okay to take the failure even despite this potential short-term downtrend already having a close outside a new low, which is one thing that I was struggling with on the failure. Now, here's another example. This downtrend has played out. Okay, great. You have a failed second entry. And again, this one's pretty similar to the first one that I was looking at where it's going right into the channel line. And that's why Thomas marked it aggressive here. Let's see. Oh, the other thing is this short-term uptrend already has a close outside and new high. So why is it that, we're looking for a failure? Well, because the downtrend is played out, again, we're going to go ahead and draw that wider uptrend right there. So I think this would have helped me to take the failure. Those are the closest kind of examples I could find in the past, like 30-ish charts that I looked at. And for this one, it was kind of tough to find any really closely similar trades. I think I found one that was relatively similar, but like not exactly. I was looking really for two larger legs up and then a lower high off of a pretty wide trend. I couldn't find one that was like exactly like that. But here's one that I thought, kind of resembled it. It doesn't necessarily have the two legs up and the lower high, but it is a lower high off of a kind of weirder trend. So the thing that I really wanted to point out here, and the thing that was similar to the other one, because the main thing that the main reason I didn't take this one was the signal bar, but this is a very similar signal bar. It's a doji with no body and a very big tail, but Thomas again specifically talks about the great momentum with the bearish tail. Again, this is obviously a little bit different, but it's kind of a weird trend that you're not so certain about. But it does also have the breakout pullback, which kind of adds a little bit of oomph to it. But anyway, the main thing is just that signal bar there, that even though it's a doji signal bar, you can look at the rejection on the tail and still consider like, okay, this could still be a trade worth taking. So that was really the closest thing that I could find on that one. I wanted to go over kind of my takeaways for the day. I think this is something that I'm going to start doing every day, is just kind of, a few bullet points on things that I think are important and that I want to remember. One is the one that I was just touching on there. Even if something is a doji bar, you need to look at the size of the tail, because big tails still show lots of rejection. You can't just automatically write off dojis, which lots of times I'll see a doji bar, or I'll see one that has a slight just body in the wrong direction, and I'll just go ahead and just write it off. But that's not always necessarily the right case or the right thing to do. If there is really strong context, in which case the trade that I was looking at is, then you can't just automatically write it off. So next, even if a short-term trend has a break in new extreme, that doesn't mean you completely write off the failed second entry, especially whenever you're in a contextual area where you're expecting a wider trend. So that was the main takeaway from the trades that I was looking at with the first example, is that whenever you're in a contextual area where you are expecting to see a reversal, then you can go ahead and draw that trend a little bit wider in the opposite direction. But you need to watch out for the channel line, because we did see a couple examples where we were going right into the channel line, and at that point it's moved too far and the risk is too high that you are going to reverse. So two things to keep in mind there. Next, you can't rest your hat on one particular context and setup, because you might not see it again for months. I looked at 30 days of charts, which is not an incredible amount, but it took a little while. And I couldn't find another lower high after two larger legs off a wider trend line, so like this. And this seems like it should be a trade that shows up every now and then. And it does show up every now and then, but it's pretty sparse. So let's say hypothetically, if I said, okay, I'm only going to take lower highs off of a trend line after two larger legs up. Hypothetically, you could do that, but you might be waiting for months to see another one of those, so they don't happen super often. And that's the same with any trade. Even if I said I was going to take second entries and strong trends, that's great, but we might not get a strong trend for multiple months at a time. So that was just something that I thought about there. Even if prices don't react off the overnight extreme level on the way out, so like let's say we're in a range, like I'll go all the way back. So here, this is what I was referring to here. So we were in the overnight highs levels before this, and we came down out of them. We didn't really react off them strongly on the way out, so I went ahead and just kind of ditched it. But Thomas went ahead and dragged it a little bit further. So my takeaway there was that even if you don't react on the way out, you still want to drag it over, because prices might react on it, using it as resistance or support on the other side. Always look left and trust your gut on weird looking trends. I'm referring to pretty early on here. We had, let's see, let me find it again. This trend here, which I drew too wide. I did notice that, yes, we were in a pretty strong downtrend, so you don't really want to draw anything too wide. And my gut was telling me, okay, this is a really weird trend. I don't think this should be here. So I should have trusted my gut here and really put some more emphasis in looking left and knowing that the overall structure was bearish. And then finally, look for ranges as prices are breaking wider trends. That's something that I have never actually considered, and it's the first time that I've heard Thomas mention that. But whenever we were breaking the wider downtrend here, whenever we were breaking the wider downtrend here, he's talking about how weak channels can oftentimes break, and whenever they're flip-flopping the EMA, you can go ahead and draw your range and expect there's going to be bearish depletion. So that's a super good thing to keep in pocket. That's all I've got for today, and I'll be doing my review for today for 12/20 probably on Sunday, most likely.